right, joining us right now is Tesla Uber bull, Cathie Wood, the founder and CEO of ARK Invest. Cathie, it's great to see you.
Thank you, Becky. Happy to be here.
Tesla is the top holding in several of ARK's funds.
Yes.
That continues to be the case?
It does indeed.
What have you thought about the news that we've seen? It seems like every week there's a new story that's either about Elon Musk or about Tesla. What do you think so far? What do you think of the Cybertruck? What do you think of the trial that just found that he was not guilty of defamation?
Well, if on the Cybertruck, we've analyzed it from many different angles, metrics, and it far surpasses other trucks. I mean, you saw the towing of the F-150. There was some doubt about the Cybertruck being, the Uber truck that
there were even questions when they saw pulling the Ford F-150, saying because the slack was there, it gave the advantage to the car that started out.
Sure. Yes, we've done so. Sam Corris, if you look on Twitter, you'll see a number of charts that he's done comparing the Cybertruck to the F-150 and other trucks. There's just no comparison.
You think that this is I guess that's a point, too, though. It's not necessarily a fair comparison. You think it's going to be people who would have bought a Ford F-150, or is this a brand new market? It's
interesting. We did a Google Trends analysis of the excitement about the Cybertruck relative to the early days of the Model 3. And what we're seeing is the excitement is in the areas you'd want it to be, in the Midwest, in the more rural areas. So I actually think it's going to be a significant competitor to the F-150.
What has to happen next in terms of Tesla and its shares? What are the next things people are watching? Because they've had some strong earnings. They've done better than anticipated. There's a lot riding on this next quarter that comes up. But what are you kind of watching to say, hey, we were right, this is the way it's headed, and it's going to continue to go up from here?
Well, there are 4 barriers to entry that Tesla has, and I think now many more people are beginning to appreciate them. Their battery, the cost of their battery, much lower, so much lower than other auto manufacturers that these other auto manufacturers are going to have to sell their electric vehicles at a loss, or a higher price, or if they want to meet the competition, Tesla, they'll have to sell at a loss as they are losing their internal combustion engine business. So that's one moat. The second is their artificial intelligence chip. This is like taking a leaf from Apple's book, when Apple was pushing the smartphone market ahead much faster than Nokia, Ericsson, Motorola, it designed its own chip, and the rest is history.
What kind of market share do you think Tesla has to capture to kind of capture the kind of price that you've talked about over the years for where the stock could be?
Well, so we have our bear price. 5-year target is $700, and that would be if they lost 2/3 of their market share and had no autonomous.
If they lost 2/3 of their market share.
So going from 17% of global EV sales down to 6%.
And by the way, just so we're clear, you're measuring this on total EV sales. And you're considering that to be a separate market.
As the EV market grows, if their market share declines,
like Apple did,
right?
But Apple maintained 80% of the profits.
What did you say your price target would be in the bear case scenario like that?
$700, so a doubling over 5 years, which meets our minimum 15% compound annual rate of return.
But you're saying as a total share of the EV market, not the total share of the automobile market.
Correct.
Okay.
So
it has to be 17%.
No. It's 17% now.
Yep.
And our bear price says they'll lose 2/3 of that, going to 6%.
6%.
Our bull case used to be that they would lose 1/3 of their market share, going down to 11%. We are rethinking that because they have been maintaining that 17% market share over time, and so it's quite possible that they could gain share.
Can you relate the EV market, total EV market, to the total automobile market? So if you were to take those numbers and translate them for us, what percentage of the auto market does Tesla have to capture for these numbers to work, if you think about it in that context?
Okay, so we believe that the EV sales in 2024 will be 37 million units. So that's more than 1/3 of total auto sales. And so if Tesla maintains its market share, I'd have to do the arithmetic. But I think the more relevant the statistic is percent of EVs, since that's where the market's going.
Right.
Right?
But
Yeah.
what I'm trying to understand is, therefore, when this is all said and done, to the degree that you have to believe, under your scenario, and I think largely everybody's scenario, that one day the entire automobile industry will be 100% an EV market. I'm trying to think through, what does that mean Tesla captures?
Yeah, we believe it could capture. We're evolving to the point of view that it could sustain this 17% market share. Yeah.
What do you think when you hear people, like, your bear case is that the stock more than doubles from here?
And our bull case,
but what do you think when you hear people who say, my bear case, there was the guy last week who was talking about it, my bear case is the stock goes to $10?
Well, I think they're ignoring a lot of realities. We've talked about the battery as a moat, artificial intelligence chip as a moat, their miles collected, real-world miles, which is what's going to feed the AI engine. They've got 14 billion miles. Google has 10 million miles. And still, Tesla is the only auto manufacturer that can do over-the-air software updates to change performance.
Very quickly, what automobile manufacturer in the world has the largest market share right now?
Well, I think you've got Toyota and Volkswagen.
And what numbers would you put them at right now?
They have
total market share.
Roughly, if I'm not mistaken, 10 million units each.
Okay. So what percentage of that would?
So autos are about between 85 and 90 million in terms of unit sales per year.
Okay. And then my last question, and their market caps.
Their market, to me, that's not relevant because Tesla is not an auto company, and it does not face the hurdles that they do in terms of trying to move to electric and move to autonomous. It's going to be pretty difficult.
Kathy, thanks for coming in today.
You're welcome. Thank you.
Remind me again, 4,000 by when?
Well, we are in print, actually. We don't even talk about this number. It's a 5-year time horizon.
Okay.
Originally 4,000, but when we did our next run at the model, we came out with 6,000. We've just completed another run. Stay tuned. It'll be on GitHub within a few weeks.
Wow, okay. So it does beg the question. This is a company that's only a handful of quarters been profitable. How do you apply that value? How do you get to those numbers?
So we are focused on the electric vehicle market, first of all, and how quickly it will grow. We think that from 2 million units last year, we'll be at 37 million units. That's about a third of the total auto market in 5 years, 2024. Originally, we thought in our bull case that Tesla would lose a third of its market share. So its market share was 17% last year, so we thought it would go down to 11. It has not been losing market share. And as we're looking at other auto companies, seeing how far behind Tesla they are, we're beginning to believe they may not lose market share, which is a huge change in our assumptions. And that's even before autonomous. We're not even talking about anything autonomous right now.
At $6,000 a share, Tesla has $1 trillion market cap, if I'm calculating that correctly.
Yes.
The two companies right now that have that are Apple and Microsoft. They are very, very nicely profitable. Do you expect that Tesla will have to be very, very nicely profitable within 5 years to hit that market cap?
We believe it will be very nicely profitable, and it's not going to be profitable just because of electric vehicles. We think the margins on electric vehicles are going to be much higher than most analysts anticipate, but it's going to be because of their autonomous taxi network. We believe they're building out an autonomous taxi network, that it's on the drawing board. And those margins are software as a service-like margins. So in the 80% range instead of the 30% gross margin range. So yes, and because auto analysts are auto analysts, they can't see this. This is a software as a service model. This is nothing that traditional auto analysts are used to analyzing.
Although once you start talking about autonomy, then you're starting to run into regulatory friction, right? I mean, what gives you the confidence that even if Tesla were to execute flawlessly, that cities and states and the federal government would be there to help this technology get integrated?
Yes. Well, we've been very gratified in listening to the regulators who have analyzed Tesla's accidents and actually come to the conclusion that people who own Tesla cars are 40% less likely to get into an accident. Now, 90% of all accidents, which include fatalities as well, are caused by human error. Regulators are very focused on the data, and the data that Tesla is delivering is, in their view, quite remarkable.
But you don't think it's going to take an elongated period of time for them to work through the politics and the optics of all that data management?
Right. Elon thinks that if regulators allow, he will establish his autonomous network by the end of this year.
I want to know what you think, not what Elon thinks.
We have it delayed by a year. We adjust for Elon Musk time. So we think by the end of 2021, you will be seeing autonomous networks throughout the United States and through China.
Now it's time for our call of the day. ARK Investments founder Cathie Wood said that she believes Tesla could be worth more than $6,000 per share in the next 5 years. Joining us now to discuss is ARK investment analyst Tasha Keeney, back on the program. We've talked to you a lot about Tesla in the past, but this seems to be a different Tesla. We're in a new dimension here in terms of what the stock is doing. I mean, in the last month alone, it's about 40%. Go back 6 months, we're talking 200%. So this 6,000.
And the stock is at 520 something, or 530 or something like
528, something
right,
like that.
Yeah. Almost at the high is close to 540, but it just, you can see right there.
Yeah.
We're getting a lot of people coming out on the street. We had a call recently about 612, but 6,000.
Yeah.
How do you get to 6,000? What makes you go from 4, which we've talked about before, to 6 now?
Yeah, sure. So I should say that we're updating our price target, and we will publish a new model in a few weeks.
More than 6 then?
I can't disclose what the numbers will be, but look out for it.
My mouth is agape.
Well, I'd say that. So 6,000 is our bull case.
Yep.
So that's assuming that autonomous driving gets turned on. That's assuming our bull case assumptions for the EV market. Broadly, what I'd say, what's changed in our assumptions over the past year? Well, we've always said that Tesla was 3 years ahead on batteries, on autonomous hardware, and autonomous data collection. And really, we're adding software to that, over-the-air software updates. They've always been ahead on those fronts. Totally. And what we've seen happen is really the rest of the auto market, shockingly, is still so far behind Tesla. I mean, there hasn't been an EV produced that's on par with a Model S, which came out, 7-8 years ago. And we're just seeing it move further ahead on all of those fronts.
That's a really good point. I mean, I never really sort of thought about that, okay, but what's next? What's in second place? Right?
That Jaguar one that everyone keeps talking about, the e-tron, the Prius.
Sure.
Yeah, I know you're right. It. Well, we keep saying there's a Tesla
Your point.
killer
It's
coming.
Tasha's point.
Yeah. Exactly. Yeah. Well, that's been the dialogue for so long, but it's like, where is it, right? And right now, I mean, they have unbeatable performance for the price, that's for sure. And now with the Shanghai factory, which is one of the reasons, the stock has appreciated so much, they've made so much progress there in just a year. And that's obviously a very important auto market. It's the first wholly owned factory by a U.S. automaker. So we think this is just going to accelerate that story. It's going to help the cost structure. It's going to help Tesla scale in a capital efficient manner.
I guess, I have a philosophical question about, because from my view, the way that you guys kind of invest at ARK is you have these big themes and you say, all right, this is probably going to play out over X number of years. I mean, you guys have been on Tesla for many, many years. And when you have a moment like this where the stock all of a sudden starts validating a lot of things you've been thinking, I guess the question is it playing out in the way you thought? Is it still surprising in the exact details of it, right? The timing of the China factory has been a lot of this move, and I don't know if you guys were sketching out, December 2019 is when it'll turn on. And I guess thinking about that longer term as the stock starts to approach levels that are putting you guys in much more serious place, do you feel the need to revisit your thinking, or can you just kind of say, yeah, see, we were kind of thinking this the whole time,
I mean, we're always revisiting our thinking, sort of double checking our assumptions. So I'd say that process is constant. And in terms of what surprised us, honestly, we're seeing all these analysts up their price targets, as you're saying, but we don't see ratings change. So to say,
we've got hold rating in 455, right? Something
exactly.
Like that.
So yeah, the stock has hit all-time highs, but there's a lot of sort of unlocked opportunity there, and we think that these analysts that are traditional auto analysts, they might come up for a review, and maybe that stock is now going to be given to a tech analyst because they've been misunderstanding the story for so long.
Tasha, could Tesla ever be America's #1 car company?
I think so. The future is electric autonomous vehicles. Mm-hmm. And right now, again, Tesla just has such a lead in that market that I don't think that's a wild assumption. I mean, especially in the autonomous car space where you get, it's a winner takes most market. Mm-hmm. We think they're going to be able to launch autonomous taxi service, say, in the next few years. I think the opportunity could just run away with them. And if you look at the other U.S. automakers, I mean, again, their EV platforms aren't as great, and they're really behind on the data collection that you need to get an autonomous program.
Charging systems, ecosystem, all that. Mm-hmm.
Well, and then I guess somewhat related to that, obviously, in the car business, you drive it off a lot and it loses value by 50%. When you think about, do you think that Tesla's, by merely holding their value, right, they obviously exceed competitors by, up to 70, 80% in a year, but do you think that the car could appreciate in value, or just by holding its value, it becomes, obviously, again, more valuable relative to other offerings?
So without autonomous, right now, the cars have the best resale value of any mass market vehicle. With autonomous driving, the way that I describe it is the car becomes an asset that can now earn money for you. Mm-hmm. So in that sense, it's much more valuable with that opportunity. So we think this is really what gets us into the thousands for our price targets, that autonomous car opportunity.
You mentioned the car companies are in trouble. There's one car company, at least this week, is not in trouble. That's right. Tesla, that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car, and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast, and the numbers have gone up dramatically, and yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So do you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
I mean, can we really be that pessimistic about the likes of BMW?
They're failing miserably. And in battery technology, they're not riding down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months, 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturers, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in, capital spending, is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
Don't you think it's a little early to count the traditional companies out of it? I mean, they haven't really almost gotten started.
So that is the problem. That is the problem. They have just gotten started, and what they have delivered are cars that don't even meet, whether it's range or other metrics, the Model S circa 2012. Now, of course, there are three other advantages Tesla has. So battery's one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.
All right, we talked about Tesla bulls, and we're going to meet one in just a moment. In fact, one of the biggest ones on the street. But to preface that, Tesla's wild ride has left many of the analyst community in the dust. Check out where analysts stood just a year ago on this stock. Average price target was roughly $300 a share, just above where shares were trading at the time. Today, the average price target is closer to $500 a share, and that's more than 30% below where the stock closed today after that distinct sell-off. Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be. But our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
So you take out your lowest probability scenarios, you take out the ones that you think just aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are 3 sources for the increase in our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally, that includes China, to something lower. Instead, it went up to 18%. And the reason it
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Electric vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles. Their battery cost is 3 years ahead, 3 to 4 years ahead of any other auto manufacturer in terms of the cost declines. And so every other auto manufacturer will, if they want to be competitive with Tesla, and I'm including BMW and Daimler and all, if they want to be competitive, like for like, they will have to sell their cars at a loss at the same time they're losing their internal combustion engine business. So they have a big problem. So
are you confident enough in their ability to overcome what I would call sort of manufacturing hairballs that have struck them in the past and caused them to miss or delay production targets?
So nothing is in a straight line. You can't promise. But what they did in Shanghai was unbelievable. Breaking ground and producing within a year. And I think they're taking those learnings elsewhere. In Germany, outside of Berlin, we've been thinking, okay, that's a setup for bureaucracy. They have been welcomed with open arms because Germany doesn't want to lose the auto industry, right? And they don't want to lose the jobs. So, and now we're hearing potentially about Texas. So we think they're going to surprise on the production side now. It took a lot of trial and error, just like with their Falcon rockets. When they were trying to land them, it was failure, 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 then success. And now they've been successful pretty much every time since. So I think they've gotten the manufacturing.
Kathy, when you take
down.
Tyler's question to the next level,
yes.
do you dig in and get granular on the opportunities when you look at the sum of the parts? Is it going to be panels, autonomous drive, or batteries that are the new breakout? Because when we look to Tyler's point, when we look at the cars in production, everyone thinks they're an expert on what they can and can't do with Tesla. But is there going to be shockers going forward where there's going to be a breakout valuation on batteries because their technology is so far advanced?
Yeah, I think they acquired a company called Maxwell Technologies, and they've been very secretive about what that is going to do for their battery technology. So what I just said to you does not even incorporate Maxwell. So yes, we do think there are surprises on the battery front. They have their own AI chip for autonomous, the only auto manufacturer to have one. And James Wang, who worked at our analyst, who worked at NVIDIA for 8-9 years, took a look at those specs and said 4 years ahead of anything that NVIDIA is going to be able to produce, because it's single purpose, it's not general purpose. So we think they're going to be way ahead of the game on autonomous, and that's where the real surprises are going to be, because autonomous is a recurring revenue, very high margin, almost software as a service like opportunity, autonomous taxi networks. And what you have baked in the cake from the street primarily are low margin gross margins, more like auto, in the 25-30% range. We actually think gross margins, because of their battery technology, could head for 40% on the EV itself, and then the incremental revenues from autonomous would be in the 80% plus range. And we think that's what people are missing. And in our $7,000 target, so the scenario testing, we assume only a 25% chance that they're going to be up and running with autonomous within 2 to 3 years.
Karen, jump in.
Yeah, so kudos to you. I mean, you had what I thought was an outlandish target 2 years ago, or 1.5 years ago, and here we are. And so you have another one, maybe outlandish, maybe spot on. But let me ask you, when you get to this 7,000, to pick your more moderate case, what's it trading at? As a multiple of earnings, or as a what will that valuation then be?
So in 5 years, again, we don't really operate like that. We're just trying to figure out the cash flows and then discount them. But one of the things that I'd like to focus on is the reason this is going to be such a big upside surprise is because Tesla is riding the convergence of 3 major innovation platforms. Convergence. It's very hard to analyze this in the traditional world, right? Auto analysts are not robotics experts. They are not artificial intelligence experts or battery experts. We have 3 analysts working on this model together. All of them are characterized by exponential growth during the next. We are ready for prime time. The seeds for what we're about to witness now, not just with Tesla, but with genomics, with 3D printing, with everything we do. The seeds were sown during the tech and telecom bubble. The costs back then were way too high to play out, for those platforms to play out. The costs have been coming down for 20 years. We're ready for prime time. These are 3 exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value. This is all we do. We do nothing but disruptive innovation, because we have never seen as much disruptive innovation evolving at the same time ever. You have to go back to telephone, electricity, internal combustion engine. That's the last time we saw exponential growth on the order that we're going to see.
I want to get in one quick question from Dan, one quick answer from you.
Just real quickly, and this is near term. Do you expect volatility around earnings? There was in the last couple of years, but like for instance, they sold cars at a 450,000 annualized rate last quarter, right? And when you look at their net income, it all came from selling tax credits. Do you expect that to be a big component of it? And does it look like that at other places around the world? We're expecting really a lot of growth to come.
Quick answer, subsidies? Please.
Yes.
They're going to get a lot of credits from companies like Fiat Chrysler, who's paying them $500 to offset. So we think that, but that's not in our models. We never include subsidies in our models. What we're talking about right now is Tesla is ready for prime time as an EV and AV manufacturer.
All right, you got to leave it there. Kathy, thank you very much. You've done your homework on this one.
Thank
really
you.
appreciate it. Thank you.